good evening and welcome to the India Development Debate. I'm Tamanna Inamdar. Has the mood of euphoria in global markets, in equities, in asset classes, ranging from everything to cryptos, soured in the last few days? And is this a temporary blip or the heralding of a new phase? Are we entering a risk-off phase where investors are finding their risk appetite diminishing massively? We're seeing this in the Indian markets. It was a miserable Monday on Dalal Street. We're seeing this on Wall Street right now. In fact, let me just tell you what's happening on Wall Street. A deep sea of red with the Dow Jones down nearly 600 points as we speak. The Nasdaq nearly 350 points down, and the S&P 500 also about 2% down. Meanwhile, on Dalal Street, we had the Sensex fall about 1,500 points. The Nifty has lost 6% in the last 5 days, and investors lost a whopping 9 lakh crore rupees just today. This is not just limited to the indices. Broader markets have also seen a deep sell-off, and it's across asset classes. Cryptos have taken a beating. Now, what really is going on? Why have we seen this plunge in equity? Why have we seen investors get so jittery? Is it all just because the Federal Reserve is going to be raising interest rates? Is that the simple solution, or is there much more? How long will this last, more importantly? That's the big story we're tackling on the show this evening. But first, let me go across to my colleague Jayesh, who's explaining to us the broad reasons for the fall in Dalal Street today.
So if you look at the Indian markets, they are not falling in isolation. It is in tandem with what the rest of the world is doing, not only on the global front, but some of the other asset classes like Bitcoin as well. Over the weekend, we did manage to see Bitcoin fall as much as 50% from its all-time high levels as well. Now, there are a couple of domestic as well as global factors that are impacting our own markets. Let me start with the global factors. One is, of course, the fact that, there has been oil price surge, which is close to its 7-year high. And secondly, we will have the FOMC meeting this week, wherein the Federal Reserve is expected to increase rates. Now, that has been factored in more or less by the markets. However, what the market will be focusing on is the commentary which comes in from the Federal Reserve officials. That will be important to note, whether they give any hints as to, how many rate hikes are coming in this year itself. That's of importance to the market. Moving on to the domestic factors, you have the FNO monthly expiry, which will take place on this Thursday. Remember that this is the last FNO expiry before the big India budget that gets unveiled on 1st of Feb this year. So that's why we are seeing heightened volatility in the Indian equity markets. Of course, the other fact is that many companies are reacting to their Q3 earnings, and the fact that valuations in the Indian markets are not on the cheaper side. They are in fact expensive as compared to global equities.
We saw a similar smashing in cryptos as well, with major currencies losing badly over the last few days and today. My colleague Alex is giving us a run through of what is happening there.
Well, it's been a torrid few days for risk assets globally, and among them, cryptocurrencies have borne the brunt of the selling. They are more volatile than other assets, and therefore they swing either way more significantly than other assets. But let's lay the context. You've had the Bitcoin that has lost a significant amount of value. In 2022 alone, it has lost about 27 or 28% of value, and altcoins have also lost quite a bit of ground. Ethereum, for example, has lost about half of its value since its peak in November last year. In fact, a number of cryptocurrencies, as many as 43 of them, have lost about 50% of their value in just a day. So why is this happening? You're seeing a risk-off sentiment globally. This is being fueled by fears of increase in interest rates that has actually been confirmed by the US Fed. There is a meeting that is imminent that will decide on rates in the very short term. That decision is out on Wednesday, so there is a fair bit of uncertainty ahead of that meeting. Besides that, you also have the fact that equities have been sold into quite strongly. So the Nasdaq, for example, has lost about 13% in the year-to-date period in just 2022 alone, and that's also leading to the overall risk-off sentiment. Besides that, you have several geographies that have stepped in, authorities that have stepped in to curtail the use of cryptocurrencies. China, remember, in September last year, banned the use of cryptocurrency. You had the PBOC stepping in there. Russia, just last week, talking about banning mining of cryptocurrency and, in fact, potentially use of cryptocurrency in that market as well. And the US, the Biden administration, talking about regulations that will govern digital assets going forward. So a lot of moving parts, but of course the overarching sentiment is that of a risk-off trade, and that is having a bearing on crypto assets.
So quite a perfect storm of factors which are leading to the mood that we're seeing in markets right now. Now, the key question is that how long will this last? Devina Mehra, Chairperson and Chief Investment Strategist at First Global, with us on the show today. Aditya Kondawar, Chief Operating Officer at JST Investments, speaking with us. And I'm also joined by Gaurav Dahake, co-founder and CEO of Bitbns, who will give us a perspective of what's happening in cryptos. Welcome to all of you. Great to have you on the India Development Debate. Devina, let me begin by getting your overview. Would it be fair to say that we are entering a risk-off phase right now? And is the primary mover over the next few days going to be what the Fed does or hint at? Or are you looking at the geopolitical situation which is developing between Russia and Ukraine?
I think the Russia and Ukraine thing is a bit of a red herring in the sense that ultimately, those kind of things keep happening. So the more fundamental thing, especially if you're looking beyond the first just a few days, but on a slightly longer term also, is that you will see over a period of time both the Fed as well as the ECB and the other major central banks raise rates. So that much is a given. How much, when, those are the things we are debating. And all of us like to talk in jargon, but let me just explain it for the lay person and the viewers. That what does that mean when interest rates go up? Because we all talk of P's. P's are what? That is price by earnings. If you invert it, it is earnings by price. So it is how much you are earning on something you are investing in equity, and that is compared to interest rates. That's always the benchmark. So whenever anyone also says the PE is too high or historically too high or too low, you have to compare with where interest rates are. So as interest rates go up, P's shrink. So that is one given. And the reason for that is very simple. When interest rates are very low or zero or negative in the West, you don't mind it earning into the future. So if the cash flows or earnings are coming 5 years, it doesn't matter that 5 year out earning is almost just what it go up. Those
All right. I've lost that line. I wanted Devina to complete that point because, she's really explaining it very well. Why are high interest rates spooking everyone? So we'll try and reconnect her and get a better line going there because I think we must go through this detail. Aditya, in the interim, of course, that big picture fear of increasing interest rates are there. We've been seeing it impacting tech stocks. Globally as well, we've seen your platform companies or your new internet companies taking a beating. But the theme and the question today in the Indian markets was clearly your erstwhile IPO stars, which was all of your startups, your new tech companies, your Zomatos of the world, which got hammered today. Now, in your view, are they just following the same pattern that their global counterparts are? Or is this now a reckoning of real valuation?
Yeah, so hi Tamanna. Number one, I believe that startups across the globe are behaving in a similar manner because we need to understand at the crux of startups are a lot of expectations, right? A lot of these startups are being hailed as the next Amazon or the next Pinduoduo or the next Baidu, Alibaba, Google, or the likes of it, right? So even when we spoke last time, Tamanna, we spoke about Paytm, right? We spoke about a lot of platform companies which were very richly valued. Now, what really happened with zero interest rate regime was that a lot of capital flowed across the globe, and a lot of it came to India as well. It flowed to startups as well. And as and when the reality hits, expectations have been built a lot in the startups, and when they don't deliver, right, the reality check comes in. Now, of course, what has really happened in Nasdaq in the past week is kind of a trailer of it, because when we talk about Netflix, right, it is now down 50% from its top, and that was despite having a good performance. The only miss that they had was a subscriber base that did not really come in as expected. So of course, it's going to be a tough time for all the startups. They are going to get a lot of reality checks, and yeah, I mean, at the end of it, it's not going to be this fancy metrics, but it's going to be cash flows and profits and the likes of it. Yeah.
What's amazing is how quickly that mood has changed in the market. I remember conversation upon conversation during the IPOs where people said that, you don't look at profits for these kind of companies. You look at future expectations. One gust of wind and that mood has changed. Aditya is laughing because he knows the conversations I'm talking about. Devina's line is back. Devina, I hope we can hear you clearly because you were explaining beautifully what the big deal really is about interest rates. Can I request you to reiterate that so that our viewers can hear?
Yes. So basically, as interest rates go up, companies which have earnings way out into the future now will those earnings and cash flows will get discounted at a higher rate, which means the value of those cash flows reduces, value of those earnings reduces. So companies which are generally called growth companies, which is like where you don't have much to show just now and all of it is out into the future. Those are the companies which have been and will show the biggest hits as interest rates go up. And that sets the global stage. And I mean, while India is, to my mind, this year, India is going to be one of the better performing markets. If you compare with the globe, that still doesn't mean that you might see a huge increase. And in India, I caught the tail end of the conversation. You were talking about these hotly valued IPOs, and it had been my view, even while those IPOs were getting listed, that this extremely high risk part of the market, and people should not jump in thinking that if they get these shares, they have won the lottery. I mean, that was clearly my view. And unfortunately, most of these kind of IPO frenzies come towards just before the market crash. But I would also like to say that that as they say that all past crashes are opportunities and all future crashes are risks. So it is also, when you are in it, how do you look at it? So as I said, the risk in India, I think, is still a little limited compared to what it is in the richly valued technology companies globally.
Yeah. A lot of domestic factors that are also being talked about, and we'll come to those in a bit. But I want to go to Gaurav just to get a sense of what's happening with cryptos. Carnage, complete carnage with Bitcoin, with Ethereum. Gaurav, what are the basic reasons and how long do you see this lasting?
So a lot of it is correlated to, of course, the broader equities markets. We are seeing there is a much higher correlation between how S&P and Nasdaq is performing versus the crypto markets. Apart from that, there are specific crypto reasons as well. So the stance that Russia has taken, there is internet shutdown in Kazakhstan, which has taken a lot of mining firms down, and about 15% of the mining hash power is in Kazakhstan. And apart from that, the general anticipation around regulation in different regions, so India being one of them. So a lot of this is kind of contributing to it. We'll see that with Bitcoin, it is broadly expected that the 30,000 range that is out there with Bitcoin would typically hold. So which is like a 10% move from here. And the market is broadly expected to sort of bounce back from them. But altcoins might see a much broader drawdown with 30 to 40% correction.
Okay, so the correction will continue. Devina, let me come back to you on your outlook. You mentioned briefly in the last answer that you don't expect India to be as hit. So what are the other kind of factors that you'd watch out for? Is the budget a big factor at all at this point, or do we just have to brace ourselves for what happens after the Fed meet? What kind of hint comes out this Wednesday, Thursday? Are those the kind of things you're looking at?
Those will have impact in the short term. I mean, what comes out in the budget ultimately, but I don't think that's going to really determine on a very long term, unless there is some drastic change. I mean, I don't know that mostly the budget gyrations are temporary. That's been my experience, barring again specific industries something gets done. But let me tell you where I think the risk in India lies, and that I've been talking about it, is also the currency. So while in rupee terms, I don't see the risk a lot in India, but the currency remains a risk because rupee has been in a band for a very long time. That is one, and what I've spoken about earlier, that's one point. But more than that, India has been reluctant to raise rates, and while the Fed has also not raised rates, a lot of the emerging market central banks have raised rates. So if you look at India's peers, right, from Russia, Brazil, Chile, whole lot of countries have raised rates, not just once, but even 3, 4, 5, 6 times. So you have held on, I mean, you meaning as in India has held on, the RBI has held on to the interest rates because rightly so, they're concerned about growth, but you held on to interest rates when your peers are raising and also when the inflation numbers are so high. So between the two things, as well as the fact that the rupee has been in a band, to my mind, the risk is on the rupee. So that if you look at a 6-month, 1-year perspective, that's where one major risk area will be. Economy, there are many areas of concern, few more than they are in the markets, because the economy, even in the last year, if you see, basically the stock market investors did well, but the rest of the economy has not done well, and unemployment numbers are high. If you look at two-wheeler sales, the two-wheeler sales are at a 10-year low. I mean, something which is not really imaginable, which really means that upward mobility is very, very limited. Real estate also, if you look at housing loan, the high end is doing well, but below that it is not. I mean, it's been stagnating for years. So I think, in the budget also, the focus should be on the economy, which means employment and longer term education and health. That would be my wish list for the budget. But as far as the markets are concerned, I don't think that's like the major event, barring the short term.
Yeah. I want to come back, Devina, to the companies that we spoke about earlier, the platform companies, the new age internet companies that have taken such a beating today. And to be fair, the broader market has also taken a beating. But we're singling them out because they seem to have fallen quite a bit from their highs. And there's a sense of a reality check. Do you think that this trend will continue for this lot of companies?
I think they remain high risk. That is the whole point. See, when you don't have earnings, any number can be justified. And I used to say, even when they were getting IPO'd, that when you are, often this question used to be put at that point, that how do you value these companies and what are the valuation parameters to look at? And I said, often when you are looking for that answer, what you are looking for is a justification for the whatever value you have in mind. And you can always do some maths on a spreadsheet to show that that number is justified. But really, whether it's old company, new age, old age, there's only one way to value companies, which is really looking at what cash flow they're going to generate over a period of time. I mean, estimation of that becomes another issue. But if you have companies which say we may never become profitable, I would say be very wary. So, any number can be justified and any number can be that it is not justified. So, that is the issue.
Aditya, let me come to you with that question. Is this just a blip for this lot of companies? Because part of the euphoria fueling them is the massive increase in usage of these kind of internet-based platform companies for retail and the number of people that have adopted these. Do you think that we're going to see this kind of a trend for some time, or they will bounce back?
To be honest, Tamanna, nobody knows over here because see, the whole route started with the Nasdaq meltdown, and so a lot of these companies were being benchmarked to the US companies, right? Because they are like one of the biggest innovator markets, and a lot of these companies have been benchmarked to them. For example, Zomato has been benchmarked to Uber Eats or Grab or the likes of it. So what we need to really understand over here is that even now, after the meltdown, these companies are richly valued. And as long as the Nasdaq meltdown remains, I think a similar kind of pattern can be seen over here, because the more the benchmark companies correct, the more the benchmark for these companies will be lower, right? So people will try to always compare these companies to the outside companies. So again, it's anybody's guess as to how the path will look like for these companies.
Can I add something to this, which is that if you let alone the recent fall let alone the recent fall in the Nasdaq, if you look at the longer term as in whatever 2-3 year history that many of them have, a little longer, whether it's Uber, Lyft, DoorDash, etc., they have not really performed even when the Nasdaq was doing well. This lot of no cash or low cash new age companies did not do so well. So that was also a sobering thought, even when we were IPOing all of these. The experience there, even in a very low interest rate environment, was not great with these stocks. Now, of course, that's only got, more stark.
Well, and now the interest rate, the interest rate environment is only becoming less friendly in that sense. What does this mean for cryptos, Gaurav? Do you see cryptos recovering from the current situation?
Cryptos would take, so cryptos kind of are similar markets with a lot more elasticity. So they'll kind of go on both ends of the spectrum a lot more. So if a Nasdaq falls about 30-35%, cryptos might go about 70-80% on those sort of lines. And same goes true on the bounce back side of it as well. So that's kind of out there. We see crypto recovering. There is a lot of sort of demand on the 30 to 32,000 range on Bitcoin, which is where we are anticipating a bottom, which is like a 10% move from here. It might not be the same with other altcoins where the demand, it might go even further down. But some of these clarity with Fed tightening rules and other sort of factors that are affecting crypto, once those clarity sort of comes into play, I think the market would start kind of going back upwards.
Well, the whole regulation question over cryptos is a global one, really, and governments around the world, central banks around the world trying to figure out what to do with them. The Fed might be, early on the block with that kind of an answer. Thank you so much to all of you for joining us today on a day where the waters are truly murky for investors. They're wondering what to do next. Is this a time to buy? Is this time to sit tight? But the most important step to really finding any answers to those questions is to understand what exactly is going on, and you've definitely helped us do that today. So thank you so much once again for joining us.